What you're looking for is a stock that has very low volume and it hasn't been active. Nothing has happened for the past year, maybe 2 years, and it's just been, selling off, kind of bouncing, selling off, kind of bouncing. That's really what you're looking. You're looking for an inactive stock that people, you're looking for a fresh stock. So when you think clean chart, think of a fresh chart. It's no wonder that these stocks, they don't have that much volume, In the stock market, when you buy a stock, especially a low float, you're looking at, where is the resistance? Where are the back holders? So if there are no back holders, there's no resistance. So it has a high probability of, say, as this stock, it was between $1 and $3 for like 2 years or 1 year, has a high probability of spiking from $1 to over $3 and then spiking to $15, $20. I've seen them go as high as $500. And this aligns with me as a 52-week breakout. This would be a 52-week breakout because it has never passed the $3 round for $3 for the past year. So this would be a clean chart. It's also a past runner. That means, what does past runner means? That means it has ran in the past. So if a ticker ran in the past, say over here, it ran from, I don't know, $1 to $3, it went, 2.5 times your money. So 2 times and a half. That's a past runner. It doubled. So it went up more than 100%. That's really good. So that's a past runner. So that's something I'm interested in trading. I'm interested in trading in a clean chart, and I'm interested in trading a past runner. Those are really important. And I'm looking at the volume on the daily to see if there was any big spikes and whether that spike had range and whatever, not have a lot of resistance. And the third thing, I'm looking for a stock that has range. I'm looking for a stock that's been trading between, $1 to $10 or $1 to like $50. That thing, a stock that has range, that moves, that is active. This is an example of what I like to trade. Clean chart, past runner, range, and very low liquidity on the daily chart. Number 2, what I'm not interested in trading is a dirty chart. This is a dirty chart means a stock that's been trading between $2 and $5, and it has pretty heavy volume, pretty heavy volume over here between $3 and $5, and it's basically doing nothing. It's just going up and down 10%, 15%. It's not like a big deal. That's something I'm not interested in trading, and it has no range. You see $2 to $5 for the past, I don't know, year or two, and it pretty much had high volume on the daily. It has no range. Like when stocks are between, say, maybe 30 cents and like 60 cents for like years at end, and they have heavy volume, that means, the floats are probably astronomical. They're diluting shares, and you don't want anything to do with that chart. This is an example of a dirty chart. It has no range, has a lot of volume, has, very, 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 very low range candles. That's what I'm trying to say. These candles have high range. When I see these big candles on the daily, this is the daily, by the way. If I see a stock going from 3 to 30, that's a stock that has range. When I see a stock going from 2 to 5, that's the most it could do, throughout a 2-year period. That does not excite me at all. So I'm looking for a stock to have range, and I'm not looking for a stock to be dirty. Then we're going to look at the liquidity requirements. A lot of traders just, since I have different scanners on the gap scanner, I have the pre-market gap scanner, I have the low float scanner, and have, the liquid low float scanner, and I have the midday scanner. So I have 4 scanners that I'm looking at. A lot of these stocks you're going to see, especially on the low float pre-market scanner, low volume pre-market scanner, you're going to see stocks that don't have volume. On the 1-minute candles, you're going to see stocks that pretty much have a 1-minute candle that is under 200,000. So you're going to see them, just pop up on 20,000 shares. Maybe it's going to go from, I don't know, $1 to like, 150 really quick. I don't want to trade that. That's called an algo spike. I'm not interested in trading an algo spike. I'm interested in trading a stock that has news, is fresh, it's clean, and it has money. Some of these news here. So the liquidity requirement for me is 200,000. You put the intraday 1-minute chart on it, And then you look at 200,000 at least. I prefer stocks to have at least 500,000 on the 1 minute. That means every single candle on the 1 minute needs to be above 200,000. That's the minimum I like to trade. You're going to see a lot of tickers that are just pop up on 10,000 shares, 15,000 shares, and they go pretty much nowhere. They just spike up in 2-3 candles, they're sold off. I'm trying to avoid them at all costs because sometimes they do release news and then they call pop and drops and they go up for 3 to 7 minutes and then they sell off. So it's important to avoid those. Those are to avoid. Do not trade them, and do not, I mean, if most of you are not fast enough on your keys, and I do not recommend you guys trading them at all. Moving on a bit, moving on to the daily volume. As you can see, so here we have 3.7 relative volume. So that means in the past, I don't know, however months we're going to be looking at, in the past, I don't know, 6 months, it's been trading 100,000 or 200,000 on average on a daily basis. I'm looking for at least 7 times the average volume. That's the ADR. I don't know, average volume. So the relative volume, that's what it means. So in the past year, it never went above, 200,000 on a daily basis. I'm looking for this number to be 7 times at least for me to be interested. And what I'm looking for is a stock that has really high relative volume. That means it's trading way, 7 times the average that's been trading daily for the past year. And I'm also looking for the today's volume. I always look on my pre-market gap scanner and I look at the volume. The volume should be at least 2 times, maybe at least 1 to 2 times the float. That is the minimum. I prefer stock that have, at least 3 to 5 times, maybe 10 times the float, because that's when you get into the float rotation, when stocks rotate the float, and pretty much once you get a stock rotated, it's very easy for a stock to go from $2 to like $100. It's very, very easy.